So, Richard, you're actually telling me the buy-to-let market in Fife is going into crisis. Well, I've got to say, I mean, Fife landlords, sell your property portfolios. Your tenants will soon be leaving in their droves as their first home with the new 5% deposit mortgages are backed by the government's new mortgage guarantee scheme, revealed in March's budget. These 95% mortgages are supported by the Treasury, lessening losses for the mortgage lenders should there be borrowing incapable of repaying and get repossessed, as the government want generation rent to turn into generation buy. So does this really sound like the death knell for the buy-to-let investment in Fife, as many tenants will soon be buying their first home? Or is it? What's your thoughts on this, Richard?
I mean, obviously, it's out there and obviously it gets you thinking. I think the Fife market has definitely shown some different trends for that statement. Although, I mean, I don't think it's going to change from the renters market to a completely buyer's market. And I mean, we've seen things now with buy-to-let landlords. I mean, we've got lots of new buy-to-let landlords coming into the market now, and at the moment, things kind of be stronger, I think.
Interesting. I mean, it's true that in first impressions, it might look like the first five-time buyers will now be leaving their rented properties in their droves with this new low deposit mortgage scheme. However, the potential Fife first-time buyers are facing four big issues here with their... and it will inhibit, really, their ability to take on advantage of the mortgage scheme, meaning that many will probably continue to rent, won't they?
Yeah. I mean, obviously, the Help to Buy scheme and things, that it has helped a lot of first-time buyers now onto the market, and that's great. But there's still a lot of people out there, and there's a lot of renters out there. I mean, the rental demand in the area just now is just unprecedented at the minute. Lettings has always been quite fast-paced and busy, but ever more so in the last few months.
Yeah, I mean, let's look at these four reasons. Firstly, the mortgage rate of 95% mortgages has actually increased. The lowest 5-year fixed rate mortgage with a 5% deposit today, I mean, that's with Barclays, is 3.45%, up from 2019's rate of 2.79%. That doesn't sound a lot, yet it makes a massive difference to monthly mortgage payments.
Yeah.
As you will see in this chart, you know, when we look at this just now. You know, we could see that here. I mean, there's a 5-rate fixed rate deal here. I mean, we'll talk about average price house prices. They have gone up. The average price of a first-time buyer property has risen over Fife from 187,362 to £201,003. So when you look at these numbers, you're looking at deposits much higher, borrowings much higher, annual interest rates much higher, mortgage term and length is fine, mortgage payments have gone higher. I mean, you're talking about a £126 increase in mortgage payments. Some of the mortgage payments, look at that. I mean, that's jumped up about over £40,000 over the total lifetime of the mortgage. Yeah. So it's quite a lot, isn't it?
Yeah, it's quite a high lot. I mean, like you say, that's quite a good big jump in interest rate, and it does have a big effect on your monthly payments on your mortgage, and then ultimately the overall what you're going to be paying for the property in the end. And I think that's the factor that you need to take into consideration, although it's a 95% mortgage.
Yeah, I mean, secondly, really, due to the pent-up demand post-lockdown and the land and building transaction tax holiday, this has increased the demand for Fife property, placing upward pressure on the Fife property market and prices, which has made it problematic for first-time buyers to get in the Fife property ladder. I mean, this has meant, and you'd seen it there, I mean, the average price for a first-time buyer property has risen from 187,362 to £201,003 in the last 12 months. And that in turn means that Fife first-time buyers have to save an additional £682.05 for the deposit to keep up with house price increases. Yeah. And that means the monthly mortgage payment for a 30-year mortgage for a first-time buyer has jumped from the £726.64 to the £852.14. So it is a £125.50 per month increase, isn't it?
Yeah, and there is a lot of factors that obviously contribute to it. Obviously, they're going to have to save up. House prices have obviously jumped, and you're talking house prices are about like 30,000, averaging about more than what they were a year ago. They're having to save up a bigger deposit, and also as well. I mean, higher house prices, depending on what their income and things are, they might not even get the mortgage in the first place based on their earnings at the house prices at the moment. So
yeah, multipliers as well. I mean, multipliers could change as well. I mean, the last time I had checked, probably a few months ago, multiplier was about, I'm sure it was 4.5 times the combined income now. So whereas a few years ago, it used to be a lot less. So, that could exacerbate the situation. But there's even talk about inflationary pressure now. That was just on the news the other day. Inflationary pressure in America, where prices and scarcity of materials, therefore prices are going up, therefore inflation might go up, therefore interest rates might go up.
Yeah, and they all go hand in hand, and fully expect that to.
So if interest rates go up, that means more people will continue to probably rent, won't they?
Yeah, and I mean that just influences a lot more people to rent, like you say. So and we're seeing a lot of renters at the moment still anyway. So I think it's the rental market's kind of went from strength to strength alongside the sales market, and because of these factors influencing that.
Yeah, I mean the third issue is demand for Fife's first-time property buyers, and from buy-to-let landlords is surpassing supply. I mean, it's supply is just not there. It's a real restriction in supply, adding further fuel to the fire and driving up prices even more. Finally, the fact that most Fife first-time buyers are of a younger generation, and it's the younger workers that are the most at risk of unemployment or salary cuts due to the economic crisis. I mean, that's quite an important thing as well. You might say that things will change probably in 2022. But would it surprise you that 95% mortgages have actually been here and available to first-time buyers since the summer of 2010? And they were only withdrawn during lockdown in 2020. So these 95% mortgages have always been here. So what do you think's actually made a difference? I mean, why did first-time buyers not jump into the market before?
I know. I think a lot of people, it's like it seems to just come to everybody's attention that there's 95% mortgages. They've been around for a long time. Obviously, like you say, they did put them on hold during lockdown for obviously various reasons. So I don't know why people have just become aware of the fact that they're there because they have always been here. So,
I mean, since 2010, even ultra low interest rates, the number of private rented properties in the UK has grown by 580,000 households, from 3.8 million households to now 4.4 million households, and will continue to grow. That's amazing, eh?
Yeah, I feel expected to continue to grow, and I think a lot of people didn't actually appreciate how big the rental sector is in the country. That is a very big part of the housing industry.
It's probably sitting about 18 to 19% of housing stock in terms of the rented market. And you could be mistaken for saying that, well, first-time buyers would have a property if it wasn't for private landlords taking up all the investment properties. But the reality is most landlords actually buy properties that otherwise first-time buyers wouldn't go for.
Yeah, and then in turn, provide housing for people that are waiting to get onto the housing market. So
and they've released that as well. Okay, the notion that buy-to-let is that the buy-to-let property is a strong long-term investment has not altered with the pandemic. Since the 1930s, with all of the crisis we've had with World War II, the oil crisis, the 3-day week, hyperinflation. You'll not remember any of this, Richard. This is way before your time. Hyperinflation in the 1970s. Fife property has been a hedge against inflation. In addition actually delivers a decent income yield of sometimes. I mean, I'm saying in this article 5% and upwards, but the reality is somebody like me is aiming for 10% and upwards, 10 and 15%, and I'm talking about net yield on investment. I'm not talking about a gross yield as the price of the property versus how much rent comes in. I'm talking about how much you get to the bottom line after you've used financing to leverage your position and actually leverage that up to a 10% or 15% return on investment on the initial capital.
Yeah, there's a difference in that. And I think
that's not bad when you think about it, compared with 0.5% in a savings account, if you're lucky.
Yeah, and I think when you look at, obviously, like you're saying, net yield and difference between net yield and gross yield, that's the difference between investors and landlords and things as well.
So do you think it's the case that the landlords that see buy-to-let in Fife as an investment, as a long-term strategy, will actually win?
Yeah, definitely. Sorry.
It's certainly
buy-to-let investment is definitely a great long-term investment. It has been for a long time, and I think I know it will continue to be for a long time.
It's certainly a case that I'm starting to see, and I think you'll see it as well, that we're seeing an exodus of the amateur landlord leaving and leaving the market, and they're leaving the more professional landlords to see landlording as a business, and it's not really a game. I mean, before it was really seen as a cottage industry. And most people just saw, I'll just have one or two. But now, actually, professional investors are actually coming into this market, and they're coming to people like yourself, Richard, and they're saying, look, I need a proper letting agent. I don't want to get involved in it. I'm spending far too many hours at work, probably making a hell of a lot more than I would pay you to go and manage this property, to give me an easy life and actually give me a passive income. I actually spoke to a couple yesterday who talked to me continuously about flipping and doing up properties and refurbing them and selling them. And I looked at they were more mature, and I thought, and I actually said to them, so you're looking for a second job then? And they went, oh, what do you mean? I says, well, the way you're talking to me, it's as if you're just looking for another job, because we're wanting to go in and we want to refurbish and we're wanting to do improvements and we're wanting to fit kitchens and bathrooms. And I'm like, whoa, wait a minute. It's like, I'm not wanting a second job. It's like, why on earth would you want, but we never, and I said, well, what's wrong with passive income? And they went, oh, I never really, and let me show you. So once I'd shown them that, it's going, well, passive income every day. It's like, why would I want to? In her words, it's like, I like playing tennis.
And I think very much so that, very much so, we see a lot more investors and people looking to build portfolios and just have this managed and have an agent who's out there property sourcing, advising them and managing the property, and them having very minimal to do with it and not using a lot of their time. And that is who I've had a lot of conversations with, more so recently, as investors rather than landlords. And I have noticed that there's a lot of these landlords that have just maybe one or two properties that are starting to exit the market. And you could definitely see that trend, especially over the last 6 months to a year.
So do you think it's the exit of the landlord and the entry of the investor that's coming into play? Because the landlord is getting to a point where, and the landlord's a person that manages their own properties, they're getting to a point where they're saying, I don't have time to learn all this legislation. So either I'm going to exit the market or I'm going to just hand it to a letting agent.
Yeah, one of the big factors is obviously there's so much changes to legislation continuously, obviously with the Coronavirus Act and everything, and the notice periods. I mean, that was just a very big influence on people's perspective of whether they wanted to be a landlord or an investor, and what the actual objective was. And I think if you're an investor, the objective is to obviously create passive income and have somebody manage it and look after it all for you, and even right down to finding the property. I mean, there's so much property sourcing and giving advice on what properties are the best investments now. That is, I mean, I've seen a shift in how we work with investors and as opposed to landlords now.
Do you think the Scottish government's going to follow the English government in terms of their allowing evictions to take place now? Because that was just announced yesterday. They're actually going to start to allow it to take place, the evictions. So do you think the Scottish government will follow suit soon?
Well, hopefully. I mean, we did touch on this the last time we spoke, and obviously we're approaching the time where they are going to obviously take away the restrictions with notice periods, which have caused a lot of problems. They are looking to have something else in place. What that is, I don't know at the moment, but hopefully the correct eviction procedures can be put back in place to allow us to obviously manage certain tenancies correctly, I think. That's the idea.
I mean, the long-term Fife landlords can see through the present predicament, as long as they have a long-term buy-to-let investment mindset. That's really what it's down to. Many Fife, and we always talk about that anyway. We always say to people, it's like, buy-to-let's not get rich quick. It's a long-term investment strategy to create a lifestyle outside of your normal day-to-day living, which is what your job creates.
Yeah.
You know, I mean, many Fife landlords are intensely aware of the demand for high-quality private rental properties in Fife, and it's only going to flourish as a consequence of the pandemic, whilst not forgetting that demand presently exceeds supply. I mean, I looked the other day and there's only about 80 properties right across the whole Fife market up on Zoopla that are actually available to rent. I mean, when you think about our population as around about 370,000 people and 170,000 households, 80 properties available for rents are not that very many.
And it's nothing I've seen for the last decade that I've been doing this. I've never seen numbers so low and demand so high. So I think
and it is happy days for investors then, if that's the case.
Yeah, of course. I mean, and that's what I keep reiterating. If you're an investor and you've got property, you're maybe in the process of getting ready, or you're looking to buy property, it's definitely the time to do that and get things turned around on the market quick, because the demand is just far outpassing what the supply of property is, and we've got so many really good pre-qualified tenants ready and waiting for property, and we just don't have the property to put them in.
Yeah, and most responsible landlords know their approach to their tenants with regard to condition repairs. So it's key to ensure the rent keeps flowing with their minimal void periods. You know, that's the professional landlord does that, don't they?
Yeah.
I mean, you know, I've recently just put new windows in a property, and I put a new kitchen, and I put a new boiler in. It's the same property, and refurbished another one as well, and Park Hill Wind. So, you know, ongoing investment strategy, ongoing reinvesting in the property all the time is the way forward for a professional landlord to ensure that tenants are looked after and you get minimum void periods.
Yeah, definitely. I think if you've had long-term tenants in a property, then you need to obviously factor in that things are going to need to be upgraded or replaced, to obviously keep the property obviously up to date, and also to keep the tenant happy and keep them in place as well. If you don't do things like that, you're going to lose the tenant, you're going to have a void period, you're going to have the turnaround costs, you're going to have the relet costs, and really in the grand scheme of things, you'd be well reviewing the property and seeing what needs to be upgraded.
It's the last thing you want to do, isn't it? I mean, even finally, just before we finish off here, even the Fife house prices are on average on the up. We could see that straight away. But there's still some bargains to be had in this market, isn't there?
Oh, yeah. I mean, definitely. I mean, in certain areas and things as well, there's so many great buy-to-let investments out there. And obviously, house prices have went up, and people are paying over the odds. But there's still good buy-to-let properties out there, whether that be 2 or 3 bedroom houses or even 2 or 3 bedroom flats. And in the right area, if you pick up the right property that doesn't need a lot of input and could be turned around quickly, you could have a good buy-to-let investment on your hands.
Yeah, I mean, I just did a wee check the other now, just before we came on here, and I looked at some of the other agents' websites, and I thought, wow, that's a really good price point for that property in terms of the rental yield and return. And it's something I'll probably end up considering myself, because it's now on my radar. But it's amazing. I'm thinking, and I'm looking at that, and I'm thinking, right, okay, when was it listed? And it was listed way back at the beginning of March. And I'm like, what? And that's no sold yet. That's weird. No, 1 bedroom prime area in Leven, 1 bedroom prime position in Leven, £45,000.
Yeah,
it's like, really? I thought that would have been snapped up ages ago.
I know what one you're talking about, and there's other ones that I've noticed that have sat around as well. I've been speaking to an investor recently who's been looking at one property, priced quite reasonably. It's a really good property, perfect buy to let. I think it is going to go to a close-in, but what I advised him is that what to do is if you're offering at the closing, put a price where it's not going to be, where you're not going to have any regrets on your offer. Put an offer in that you're going to be happy if it gets accepted, you've paid what you wanted to pay for it, but not something that if you don't get it, you think, oh, I should have offered more.
Yeah, but even beside that, even no seeing properties going in the market, we're actually getting properties actually selling before they actually even get to the market. So we've got an investor client bank for people, and then immediately we'll just give them first dibs at any property, and if they can make an offer that the person can't refuse, then they've got it. So I think that again explains the importance, and we keep beating that drum of people registering us beforehand. Making sure we know their information, know their criteria, know what they're wanting, and also following our Facebook pages as well to make sure they get pre-portal launches before they go to the websites, to get in there before anybody else. Because often now we're getting offers and we're getting them sold almost the day it's about to go on a website, and it's gone. By the time it goes to the website, somebody phones up and says, "Can I get?" And I'm like, "You're too late." You're
I
too
think
late.
it's important that people do realise that, especially in a market like today, that if you look at companies like ourselves that are doing all these pre-launches and have these investor clubs and things where you could look at off-market deals, because there's where you're going to find the best deals before they hit the market. Because if they're hitting the market now, you're going to be up a lot the other competition. So definitely follow Facebook and register with ourselves. And if you are an existing landlord or things with us and haven't done so already, speak to us about the Investors Club.
Absolutely. Let's take a quick look at a ready reckoner just now. I quite actually fancy doing this with people watching and show them exactly how we do the numbers.
Yeah.
Okay, so let's take a quick look at this. Could you see that okay?
Yeah.
I'll just make that screen a bit smaller so people can actually see what we're doing. Okay. So, okay?
Yep.
Perfect. Okay. So we have got one property, and we have got a £45,000 purchase. Now borrowing is probably 50,000 minimum. So minimum purchase price 50,000. We have got a 4% stamp duty. We've got a 25% deposit down. It is 3.8% just now with a typical limited company. I'll put 2.5% arrangement fee because it's round about £1,000 arrangement fee for the mortgage itself. And if you buy a £50,000 property, Richard, what typically are you buying for about 50,000 just now?
50,000, you're totally talking about a two-bedroom apartment.
Get a two-bedroom apartment, okay? Even a one-bedroom, what do you think?
One two bedroom, depending on where it is, but yeah.
So in terms of £50,000 property, what rental level do you think you would get?
If we talk about the one we were referring to earlier, obviously one bedroom, 45, obviously you say mortgage at 50. One bedroom, you're talking about 375.
So 375, and we have, okay, so we're not typing the number 375. Well, assume a 12-month occupancy rate. You can actually drop that if you wanted, you've got less tolerance, but after the mortgage is paid on a limited company, you've got £350 out, £253 out in cash after the mortgage is paid. You've got a 30% overheads. That's your letting agent. If you want to do passive income, do not try to manage property yourself. If you're starting out, forget it. Just hand it to a letting agent, because I'll tell you what, the raft of legislation you have to contend with and the people you have to contend with, you possibly end up becoming a social worker. You know, that's the reality. You have to look after people, and you have to look after them, their needs, their wants, their property, you've got a duty of care as well. You've got all that legislation to contend with. There are 50 pieces of legislation, so you need to have specialists to do it for you. Why would you do that if you could pay for less than the price of a cup of coffee every single day? You can have a professional managing agent doing it for you. So I've assumed in there 12% plus VAT as a typical managing agent. That's 14.4% of the income. And then you've got 15% there for overheads, for repairs, improvements, refurbishments over the years, and then things like your landlord insurance and other things, incidentals as well. So you're coming out with round about £1,689 after that's done. Remember, this is passive, and that's a 10% net return on your initial investment, because that's all you've got in is £16,500, because the rest is mortgage through the bank, and that's what you get. So initial equity is there as well. You've got legal fees of £1,000 to spend. You've got £1,000 maybe to do improvements like an EICR and possibly smoke detectors built into there. And yeah, that's your return, a 10% passive income return. And a bank gives you 0.5% of anything on your money. Yeah. So if you've got more than £16,500 and you decide, and I tell you what, I've got £160,000, you could buy 10 of these. And you think about it, though, So 20,000 in is, because it's 10, it's 20,000 now. So you've got 165 in, and then your net income every year is £16,000 with your initial investment of £160,000. And you've got 10 properties, one goes down, you don't have any risk, therefore, because 9 of them are running, so you don't need to worry about the fact that your income will drop like a stone, because it won't. Then over a 10-year period, we'll jump back to that one, by the way, just to make it, because a lot of people are going like, oh, I don't have £165,000. We'll jump back to that one. So over a 10-year period, this one property could return you 163% return on investment. That's through a 2% capital appreciation every year on the price of the property, and your profit compounded over these 10 years. It's probably a bit more than that, actually, because this isn't a compounded effort. This is actually just straightforward 2% every year and your profit every year. So that would probably go up as interest rates go up, maybe down. Your rent would probably go up over a 10-year period as well. So your 163 might actually be a bit more. And yeah, so that's where I see in terms of the investment return, in terms of where you would want to be. Is that quite typical of what happens?
Yeah, and I think displaying it like that on the Ready Reckoner is a really good way to demonstrate it to people as well. I think it makes it a lot clearer rather than just rattling off figures to people. To have it on screen like that is quite handy. So yeah, brilliant.
So I think we've concluded it's not the beginning of the end for the buy-to-let market.
Definitely not, no.
Any final words, Richard, before we sign off?
Yeah, I think just obviously, like we're obviously speaking about the market itself, I mean, just to reiterate how much of a brilliant market is now for investors, and if obviously you are considering investment, you've got money there which is obviously sitting in the bank idly, and you really want to invest in property, then come and speak to us, either myself or yourself, Jim. It is really a great time to be investing in property.
Well, you know yourself, all our clients know, we're always happy here to help. We give people guides for landlords. There's lots of helpful guides for investors and landlords on our Facebook channels, on our YouTube channel especially. I did 2 series last year in lockdown. It was Millionaire Mindset. It was a 40-episode series. And then Investment Strategies was another 40-episode series. Investment Strategy, Millionaire Mindset was how you need to think like a millionaire in order to be a millionaire, if that makes sense. Because you wouldn't be if you don't think like that. You get what you expect and you get what you think about the most. If you think negative, guess what? You get negative. If you think positive, you'll get positive. Investors one was my 40-episode series. I was my first 40 properties and what I've learned from each one on my journey throughout that process. So it is actually a good one for somebody to pop onto our YouTube channel. So just look up on YouTube, Fife Properties, Estate Agents. You'll get that on one of the playlists. Millionaire Mindset, Investment
Strategies is quite a good one, especially if you're a new investor, I think, because you go through and talk about your experiences and the mistakes that you made and how you rectified them and what you've done differently. And I think if you're a new investor, to try and maybe avoid making some of those mistakes, go on and listen to that. It's quite good.
And the reality is anybody could message us here direct anyway. And get more information. And that's it, guys. Thanks very much, Richard, for coming on the show. And if anybody wants more information, please feel free to message us direct here, or you can just contact us on the usual channels through our Facebook channels or our usual numbers through the offices. And thanks for coming on the show, Richard, and thanks everybody else for watching.
Cheers, Jim.
Bye for now.